Hey guys, this is Pat Dees. Welcome back to another episode on Money Me. Today we're going to talk about my experience with Viacom. Hey, if you guys could do me a favor, will you money me and subscribe to the channel? We talk about stocks, all things money here. The channel is relatively new, but my experience is not. I've experience in the restaurant business. I have a business on Amazon and eBay, and I am a landlord. And like I said, I've bought and sold options and stocks for the last 20 years. I guess, what they call the small guy for the small investor. And I want you guys to help me with this journey and subscribe to the channel while I share some of my information and analyst on things that I'm doing here. Today, we're going to talk about Viacom. And what a mistake did I make by listening to analysts. Don't always listen to analysts because it can cost you money. Let's dig into a chart and explain, and I'll tell you exactly what happened to me. Okay, here is Viacom. Viacom closed on Friday, February the 19th at $62.69. Now I have my WEBULL desktop pulled up. Oh, and that's another thing. If you guys aren't subscribed and you're interested in signing up for a brokerage account, go to WEBULL. In my description, there's a link down there. Click on that link, and you can get 2 free stocks up to $1,800 just by signing up to WEBULL. I think you got to put about $150 in. If you do, I get a referral. I basically can get a free stock too. I've gotten several shares of free stock this year, and check it out. It's a no commission. Doesn't cost you nothing. You don't have to trade. You can put the money in and buy and sell when you want to. So let's dig into Viacom. As you can see here on the analyst rating, based on 29 analysts, 55% of them have rated hold, 14% have rated buy, 3.5% strong buy, 24% have it underperform, and 3.5% have it sell. And the average, look at the average price, $36.52. We are basically 80% above that. The high is 55, the low is 1460. Again, don't go by analyst all the time. I see it so many times that I've already watched stocks on the opposite end be, for example, $100 and go to 20, and when it hits 20, then all of a sudden they say, sell it. Where were they when it was $80 or $90? So I made a huge mistake this year that has cost me money in both ways. I sold Viacom, and I bought something else, and it went against me. Had I not sold Viacom, I wouldn't be looking at the loss that I do in Roku, because I really thought at the time that Roku, based on the chart, was overvalued. But boy, once it got momentum, I just couldn't. It ran fast. So let's dig into the chart of Viacom. Here is a 6-month chart. It has been on a tear just in the last 3 months. Look at this. January the 5th, the stock was $36.50, $37, and today it's at 62. You basically have an 85% gain just this year alone. It is amazing. And I was, if you watch some last year, I have another channel, Pat Dees, where I talk reselling and life adventures and different things. If you go back and look at one of my earlier videos last year, January 2020, when I recommended Viacom in the 30s, and I really thought it would be a good $50 stock. Here was, I recommended it back, and you can go back. I recommended it, and it had bottomed out when COVID shut down and everything. It had bottomed out at $10. Okay, lost the screen share here a second. Sorry about that. Okay, as you can see, Viacom, when the COVID was shut down, had bottomed out on like March 18th, roughly, at around $10.10 a share. Now, this is a company. Like I said, if you go back and watch in the beginning, I was recommending this in the 30s, the $30 range. Then I went to 20. Then, I mean, one account we were down about $18,000, and that was probably about 12,000 of that was tied to Viacom being down as much as it was. The other one was Lyft that we owned, but it was I mean, it didn't hit back up here to 28 until June. So April, May, 3 months just to hit back to 28. So we did buy some more, but what happened, and then from June to September, I mean, it pretty much it got to 28, it dropped back down to 20. So it was an up and down, back and forth here for 3 months. That it even September it hit 31.87. Then in November it hit 30.29. So when it started to finally break out of those 30s is when I really had to contemplate, because, and honestly, it was going that the analysts were saying, and let me see if I could find any of the, probably not, because you have to go back so far. Oh, right here. I mean, here was UBS, Disney Viacom cut to sell from neutral on February the 8th. Well, that's from still this year. But basically what was happening is they kept on saying that the stock was basically, they were given targets of 37, 38. So here we are, we're approaching at the time about 1,200 shares, was starting to get to break even at around $33, $34. And it was really a large position in multiple accounts. A total of around 1,200 shares. Did have some more, but bought and sold those, and so it wasn't. But the solid core holding was about 1,200 shares. And actually, a person that I work with, who owns multiple properties, I had recommended it. Actually, it wasn't recommended; it was bought for about $6,000 worth in the 20s. And now he's almost looking at a triple because it hasn't been sold. So really, if you bought last April, I mean, you're like at 130, 135% return, which is a great return. So going back to what I was saying on the not, here even, it hit up to 46 on January 14th and pulled back. But only pulled back to 42. It only dropped back down maybe 10 or 11%. Really is when it broke out of ditch rate. And then here, we got a little sideways action here again. And I thought, we're going to go another 3 months. So I started lightening up in this area, and I sold the whole position that in 3 accounts. I sold all 1,200 shares, and bad timing for me. And because they were recommending that the price, honestly, they only had a street high of 42. And I mean, look, 42 to 62 is another 50% move that I missed out on. So we're talking at 1,200 shares. I mean, I used a low $15,000, but had I kept the whole full 1,200 shares, you're talking at 20 points. On Friday, you're talking over about $23,000 that I missed out on. Now I would have sold some more, realistically, and I probably wouldn't have waited to 62 because I had pretty much a price target of around 55, and so that's why I'm saying in full disclosure that I based on the title of this video is I lost out on $15,000 by listening to Analysts. And then what bad timing for me, because what did I do? And Viacom basically is a merger of, and this is why I felt the stock was honestly in the 30s, was worth in the 50s, because Viacom CBS was like a $50 stock, and Viacom was in the 30s. And then, so separately, the companies at one time were roughly $80. So they merged together, but shortly before they merged together, and they announced that the stock had dropped. But even when they merged together, I think at the time when they did it was called like the merger of equals, the stock still had a combined value of roughly $50. And I felt that with the content alone that they owned, and CBS obviously being NBC, ABC, CBS being one of the largest, they weren't going nowhere, and football and everything that they're involved in, and just the catalog that they own of movies and shows. If you broke that down per dollar, it was worth what, honestly, with the company, that's what I felt was worth. Now, obviously, they got overhead, they got to pay employees, there's debt and things like that. But still, I felt like the catalog was worth a certain amount of money, and that's what held the value. And based on the PE, you had a stock pretty much making $3.50, $4 a share, trading at a 10. I mean, at one time at the low, it traded at 4 times like earnings, and I thought, they're really undervaluing this, and they're getting into streaming. Well, as much as I love Viacom, when I got out of it, I had saw another stock, and I've talked about it before, is Roku, that had a tremendous run from the bottom. I mean, it went from 60 to now. I mean, it had touched 486. But basically, when I got out, and the point of this video again is to some don't listen to analysts. Because I listened to analysts and went against my gut, it cost me money. It cost me money on the upside that I lost, and on the downside, because pretty much the money that I made in Viacom plus other trades, I gave it all back just shorting this one position. I had got into in December, I started shorting this around 283, started shorting some here, and I thought, here it hit 364, and I was, at the time, I was underwater by about $4,000, and it had come back down to about 320, and I was only down about $2,000. And then all of a sudden, I mean, from 320, then analysts come out, and this is what's crazy. That they'll say, usually when analysts come out with targets, they started coming out with targets that this was going to be 450, 420, 380, but typically that is a 12-month target. As soon as they come out with the targets, a lot of these stocks were hitting the target in 9 days. So when this is where I have to learn to read charts better, and I have to learn to cut losses, because I mean, as soon as it basically broke, I mean, even when it broke above this high right here is probably when I should have packed it in. But I thought, nah, we'll get some sort of correction here. And so when I'm zoomed in a little bit, so when it broke out basically of this 365, I mean, it went from 365 to 470 in just a matter. These are all days. So, I mean, you're talking 365 here was a big, strong candle, and the volume was good. So basically, you're talking 365 to 447 in roughly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, roughly 6 weeks. I actually had, and again, another mistake is learning how to read charts. When it broke out here, I was looking at around a $8,000 loss, and it broke down, and the analyst, well, maybe we're getting some sort of correction, and we're going to start, coming back down to, in here based on, and I'll show you, based on the 1-year chart that we, and they used, different moving averages, 50-day. I honestly thought we were going to get back down here into the 320, because really, I mean, the stock has been parabolic as far. It's been, man, if you bought it, I mean, when I sold Viacom, I would have been more than happy if I stepped in Roku and just went Roku long, because the money that I missed out on Viacom, I would have made in Roku. Actually, when you kind of think about it, the 50% move that Viacom made since January in here is roughly, and I just thought about that, is roughly the same that Roku. Yeah, it is. Really, when you look at the chart, from pretty much from 360 to 490 is a 50% move, and the same move. So really, I should have just ignored the analyst and just stayed away from Roku and stayed in Viacom, because honestly, even though Roku is obviously a younger, Roku is younger than Viacom, but Roku's market cap is around 60 billion, and Viacom's is not that. Let me see if we could pull up the value of the company here. I'm new to these 450. I mean, look 450 million Roku has in revenue. Well, that's Q3. So let's go annual. No, $1.1 billion Roku had. Viacom, $28 billion. I mean, you're talking 20. I mean, I should have just stayed, because even Viacom honestly was a lot less risky. The PE is cheaper. I could have, what I was imagining, and I honestly, when I got out of Viacom in the low 40s, I was like, okay, we'll get some pullback and I'll get back into it, and I guess you can't. They say you can't time the market. Well, you're damn right you can't time the market, because I timed it completely wrong on these two trades, and I could have made, I should have, whatever. Look, we can all say that, I know, but we have to learn from these mistakes. I really felt, and this is what I'll tell you, I really felt that Viacom actually was a good buyout candidate for a company like Netflix or Amazon that wanted the catalog and the studio, and just to have that business. Now, I just pulled up on, and I'm still learning this WEBULL as far as what you can do with these different things, as far as the different, and I still got to learn a lot of this type of stuff. It's pretty neat what you can do using the WEBULL platform, but I still, what I worry is that someone gets into Viacom right now at 62 and it corrects to 50. It could be at 62 at the end of the year, and pretty much your money will be dead for the whole year. I mean, I seen that pretty much happen with when I was in Viacom last year. That pretty much, and that's why I really got out, because I had been sitting on a big loss in the position, for 9 to 12 months. And then when I got a chance to basically take out a 12 to 14% return, I was like, whew, like I dodged a bullet. And even though I still like the company, I wanted to, and when I saw the craziness of Roku taking off like it did, I was like, and here's the funny part is, I mean, I know that I just read an article the other day that the CEO just sold something like 200 and some. Oh yeah, here it is. Roku CEO, and I'll highlight it. This is how you can click on news here. Roku CEO has sold $270 million worth of stock so far this year as the stock source. So, they see going good. He's selling a lot of shares. Obviously, they do that to diversify and stuff like that. Look, I get it. You don't want everything in there, but you have market cap of $57.5 billion. Wow, this guy's rich. In 2020, he sold 200. So far this year, in 4 separate transactions. And yet the stock still kept getting absorbed. What timing he has? He must be selling at the highs, but he sold $272 billion worth just up until February 21st. Here we are when we're filming this, and last year alone he sold 218 million. So he sold more this year in about 7 weeks than he did all of last year. But combined, he sold $500 million worth of stock in Roku. So real quick before we go here, let's look at the market cap of Viacom. The 57.5 billion was for, so the market cap is 38.5 billion. So you're talking $20 billion less for Viacom, and yet that still has had a 50% run. The PE is 15, so estimated for $4.05. Net margin 8%. Net margin, they had better, hit a 52-week high on Friday. So again, the lesson learned here is don't listen to analysts all the time. So many times I've seen it, and I've seen it even with stocks that peak out. Everybody all of a sudden jumps on board. 500, 600, 500. I saw it with Zoom when a lot of analysts were coming out, and 15 analysts came out and said it was a buy, and 6 weeks later you looked at the stock and it was down. So sometimes it's a matter of doing your own homework, and sometimes trust your gut. So hey guys, I appreciate you watching. I hope you like this video. I wanted to share my, someone wrote on one of my videos, what's the point of this? The point is to show you real trades that I do, and this is supposed to be a financial education experience channel. I am not a licensed broker. I just a regular common guy that does this for a living, and I like to talk all things money. I've been doing it now for 20 years to share my, a lot of people, if they lose, and I've lost money before in the past, but doesn't mean that you give up on it. It's like owning a business, and you have the good with the bad, and you hope that you do more good trades and more good investments than you do bad. You don't really focus on the bad trades. A lot of times people, and this is where I posted another video. If you go back and watch with the Roku, a lot of people don't want to ever talk about their bad trades, but I want to share that experience with them because I don't want to portray that I'm hitting home runs every time, or I'm doing, obviously I'd be a multi-millionaire, and there are multi-millionaires that are doing YouTube content, but they're not going to connect with the small person who maybe only has $50 a week to save into a mutual fund and like that and stuff. But there's a lot of opportunity that's available, and I hope you will continue to watch my channel and support it and give me the thumbs up. Thank you.